Good morning, guys. We'll do it this morning in a video because of the issue that I mentioned in my previous message. The issue with the streaming app that does not work. I mean, the server seems to be totally overwhelmed this morning, so it won't be able to happen live. However, I'll do it just right now, and I will record it. That's what I'm doing now, and post it as a video, as mentioned in my message again. Sorry about that. A little bit confused about this. Yeah, that, and I would, there are people, already mentioning it hasn't started yet. Like I tell you, yes, it hasn't started yet because it just doesn't work. But that gives me the opportunity to thank you to be here almost every Saturday morning when I have some, except when I have some issues, some commitments or whatever. So I'd like to thank you to be here. I saw it last week, I didn't do it. I mean, it's funny, I've been doing this for a couple of months now, and it has become a habit. So basically, which means that when I don't do it on Saturday morning, I feel that there's something a little bit missing at this point. So again, I want to thank you for being here every Saturday morning, and I will try to do it right now in a video. So, where are my notes? They are here. So let's start with what? Geopolitics, of course. I will skip that, just because it's recorded. You'll probably find some comments in my more detailed comments in the newsletter that is coming on usually on Mondays. It's not usually, it's every Monday, but anyways. So geopolitics, a couple of things. We had the first, there was a G7 this week in Italy. At the same time, there was the BRICS meeting of foreign affairs ministers, where they are strengthening their alliance, and they said that they are actively working on developing a platform for transaction for national currencies, which means that at this time they obviously try to get out of the US dollars that we know, obviously, but at the same time they don't mean that they will try to implement a second reserve currency, but preferably at least at the beginning, which makes sense, to trade in their own national currency, because obviously there will be a fight, competition for a second reserve currency if it exists. This will probably be the more economically powerful member of the BRICS, which at the end of the day should be China, right? So, in the same context, there was an interesting thing happening, moving east is Saudi Arabia. We've just seen that last week they didn't renew the petrodollar agreement that was set for 50 years. They just didn't renew it, so they can deal their oil into something, whatever else. So they had started already, but so the petrodollar agreement is done by now, which makes them move east. Another sign is that Saudi Arabia was invited to the G7 summit. They refused and decided not to join. And at the same time, we have China approving ETFs on the Saudi stocks. So Saudi is moving east rather than west. Basically it's a global trend against the empire. I like this. Sorry. So next, I will, geopolitics, I will add a global segment, which will be World War III, because I mean it would be naive to think that we are not there yet. So in that sense, why this image is because Russia has decided to install ICBM, so intercontinental ballistic missiles, into their allies specifically some of them that are closer to the US, such as they plan to do this in Cuba, in Mexico, and in Venezuela. And obviously, it's a response to NATO deploying missiles in Ukraine. So basically, I will finish on that because it's a kind of a symmetric response from Russia to the US in Ukraine. So symmetric response again is this the main geopolitical event that we've seen this week, which was some warships, Russian warships and submarine coming to Cuba and anchoring in Havana. Havana, Cuba. So, I mean, it was a very interesting thing because the idea, I believe, is kind of a payback to what's happening in Ukraine. It says, okay, you're installing weapons that can hit Russia in Ukraine. We will install weapons that can hit the US in our allies. So it's another escalation, but at the same thing, I don't think it might be so bad, because what guaranteed peace over the last 50, 70 years was mutual deterrent between two nuclear forces. I mean, the assurance that if one would start hitting the other would respond to this, would be mutual annihilation. What changes is that when the Soviet Union collapsed and then the US basically remained the only global empire, and Russia had Yeltsin, a pretty well-known drunkard. So basically, Russia had suffered a massive economic collapse, so which possibly made the West think that Russia was not a threat. But since Putin came into power, I mean, his only objective was to take Russia back to where it was before. So basically, it was work on this, and this is where we are now. So we are now, I believe, back in a position of mutual deterrent, if we can say that in English, which probably is more stable for the peace in the world than it was maybe 15 days ago, where probably the US would still think that they could attack Russia, then it would never attack the US. So you probably have that kind of situation. I believe, if it's a threat to the US, I think it might be reestablishing the balance between the two power, because with hypersonic missiles being able to be fired from nuclear submarines that probably the Russians have on both coasts of the US. Obviously they are monitored, but that would be very difficult for the US to stop them, which means that the Russian, if some weapons hit Russia, some of the US cities would probably be hit as well. So so basically, I believe that potentially makes everyone think about that, and hopefully this restores the balance where everyone says, okay, maybe going to war is not such a good idea. At the same time, Russia is carrying out quite a lot of nuclear exercise in Europe with Belarus, if I remember well. And interestingly, I mean, Putin declared this week that he actually considered nuclear strikes on the West, that he came very close to this decision. Honestly, I'm not sure he actually thought. He probably thought about it, obviously, but at the same time, I don't think he was close to do it. It's probably more a message, a warning that I'm ready to do it more. I was about to do it. Anyways, That being said, like I said, I mean the Russian warships and submarine were closely followed by warships from the US, from France, from Canada. So so everyone knows that they don't travel like this so close to the US. Obviously, in response, the US sent a submarine in Guantanamo, nuclear submarine in Guantanamo Bay. So this is where we are now. Again, I mean, it's always slow escalations, but I believe that this escalation it might be interpreted as a de-escalation. At least that's what I hope so. So battlefield situation in Ukraine doesn't move much, except that the Russians are taking little positions from here and there, but nothing really massive at this point. There is what I was about to say. I mean, I think that I was thinking about this recently, and I believe that the reason why there was more escalation in the last couple of weeks is probably because the West think that Ukraine is coming at the end of what they can do. You've probably seen they are enrolling by force a lot of young men, young women as well, because there are more than 500,000 people dead in Ukraine in this conflict. So basically they are becoming short of fighters if the NATO actually is not sending any men to fight. I mean the unbalance of population between Ukraine and Russia, obviously. I mean Russia can send millions of fighters. If you remember World War II, I believe that Russia lost 20 million men in when I believe so in France. I don't remember, but I have the number for the US. I believe it's between 600,000 and 7,000 men. So I mean it's such a vast country such that basically they can throw men at you until basically there's no one on your side anyway. So my point was that probably the reason of the escalation from the West was that there are not enough people anymore to fight on the Ukraine side, which means that they may collapse soon, which leads to this escalation. And I think that the response from Putin, who says, okay, you are escalating, we need to escalate back to reestablish the balance. I hope this will help everyone come to sense and work to at least, if not a peace deal, a ceasefire. There is a peace. What do you call this? Peace talks in Switzerland at the moment that where, funny enough, Russia was not invited because Ukraine didn't want to see them. But you know that Ukraine doesn't decide alone on this. So I mean, obviously, the Russians say, okay, what is this peace deal where peace conference where we are not even invited? Doesn't make any sense. Now on the other side, Putin has made peace and with immediate ceasefire offer that Ukraine unsurprisingly refused immediately because it includes keeping Crimea and what they call the new regions, what Russia calls the new regions of Russia, the ex-provinces, east provinces of Ukraine. So it was refused right away. So I just don't know how we can get out of it. So next, what next? Let me get that. So that was the peace agreement proposed by Russia. So you have the NATO position. One of the obvious requests, demand from Russia is to have Ukraine not being part of NATO. Well, basically, the request didn't change from the beginning, and this is where basically they cannot understand each other. Now on Taiwan, the situation is escalating as well. You may have seen that the Chinese army has conducted many military exercise around Taiwan, with even a simulation of the island blockade, which in response led the US to say that, this is the title of the article, which led the US to say that if China was attempting to regain Taiwan, they will launch a hellscape to deter China from attacking. And what they mean by that is that, and they said unmanned, which means that they would send a lot, thousands, more than thousands of drones and everything to be able to fight China without sending any men. I think that this raised the fact that the US losing men in a war right now will be very negatively received by the population, and then would have an impact on the elections, if you want. So, and that's what I was saying, in a post this week, that I think the best weapon for Putin is the US population opinion. If you make the population think that Ukraine is not a remote country anymore, but the war that the Ukraine, with the help of NATO, is conducting there might come to your own places, that make a shift in opinion. So probably this is, the fact that the NATO and the US specifically says they will never send any troops in Ukraine. They want to fight China with unmanned weapons such as drones, vessels, that kind of stuff. I think it's really important thing to consider. Israel, a quick word on Israel. Like I said about maybe 2 weeks ago, the focus now is less on Gaza, because Gaza is flat-landed, the big, what do you say in English? Carpet bomb, kind of, which refugee camps that are really tiny at this time. So basically the problem is not in Gaza anymore, but now fighting their allies, the Hamas allies in South Lebanon, that has been firing rockets on Israel for years. So basically that's what they are doing now. They are striking South Lebanon Hezbollah positions. Hezbollah, as a reminder, is supported by Iran. Iran announced, by the way, that if they would significantally attack Hezbollah, they will enter the fight with Israel. But we've seen what's been done. It was totally ineffective the last time they tried, about a month ago. So it's probably only rhetoric. So that's where we are. But the other important point in Israel is that this is where we start seeing dissensions, cracks within the Netanyahu government, because you have 3 guys resigning from the war cabinet, saying that basically Netanyahu is using the war for internal political gains. So we see some cracks, no idea where it will go. But the other last big news in the geopolitical side was the European elections. European elections, where many of the right-wing parties won these elections. And I think this can be interpreted in 2 ways, because depending on the country you're looking at, the parties that have won have 2 objectives. One main objective is to reduce immigration, and the second objective is to not go to war against Russia with NATO. So basically, it seems that it has been the main drivers for the election in Europe. It's interesting, but at the same time, they will have very little power anyway. The European Parliament is still dominated by pro-European parties. Most of the parties that, or all of the parties that have been elected in recent elections are not against Europe. They are trying to reform Europe from the inside, which is kind of impossible in my opinion. And just keep in mind that there's a European Parliament, but they don't have the initiatives for legislation, the laws there. The only body that is allowed to suggest new bills, is the European Commission, that is not elected anyway. It's nominated by the government. So all the guys that have been there, like Macron, Charles, all Merkel before, and all that kind of people. The president, von der Leyen, the president of the European Union, has never been elected by anyone. So Europe is not a democratic institution. And you have to know that very little flexibility is given to the states, because now, for instance, in the French Parliament, 80% of the laws that are passed in the French Parliament do not come from the French Parliament itself, but are just transcriptions from European directives into the local judicial system, if I can say that. So the response of the markets have been rapid. You see that the French 5-year credit default swap spiked. At this point, I don't think that anyone should be concerned, because at the end of the day, I mean, like I said, they won't be able to do much. But it's just an indication that the European population basically is at odds with its own leaders. All of them want more immigration, and all of them want to follow NATO into war against Russia. And this is not what populations want. Now, you have to remember one last thing about this, is that there was already, a treason in France, democratic treason in France, because, in 2005 there was a referendum in France about the European Union, and more than 54% of French people voted against it. However, Sarkozy at the time, who was a French president, said okay, but at the same time, he passed a treaty within the French Parliament that was implementing the exact same thing that the French population refused. So I like to say that democracy died in the US when JFK was assassinated, and basically, I would say that the official day that the democracy died in Europe, at least for French people, was in 2005. Again, no one should be concerned. No, everyone is for the euro, is for Europe. So not much change to expect anyway. And I think that the global forces, like the markets, will. Because just a last one thing, and I need to go much faster than this. One last thing about the European election in France. Macron dissolved the French Parliament to trigger new elections. I think that it's a strategy of chaos at this point. Why? Because he didn't have to do this. I mean, he could have claimed that it's a European election, nothing to do with national issues. But he decided to dissolve the French Parliament anyway, because it's obviously totally rejection of his politics. And by deciding to dissolve the parliament, if the right wing comes to power, what has to be expected is to have an attack basically on the weakest point of the French economy at this point, which are government bonds at this point, and so which means that the government budgets, would basically go to the roof, and economic collapse and that kind of thing. Which would totally discredit the right-wing parties that won for probably potentially the next 20 years. And I still believe that Macron's strategy is to, basically kill France to become just kind of a European federal state, where France will only become a province. Basically, that strategy has been obvious and since the beginning, and it's now probably the loss in elections as a strategy to implement chaos, to go more towards that objective for him. So I will stop there. Just to remind that the right-wing parties have won in France, in Germany, in Greece, in Belgium as well, and the consequence were Macron dissolved the assembly, the Belgian prime minister resigned. So we'll see now who will win the elections, the French elections, because it will have an impact, but even if not so much. Okay, so let's move on. Let's move on with my friend Jay Powell. Just as transition, basically, before going to the big economic event this week, which was interest rate and the CPI announcement. Just one word as transition to geopolitics to economy, that the World Bank has raised the forecast for economic growth in 2024 from 1.3% to 2.9%. Again, we had in France the French economy minister who said that they would ruin the Russian economy at the beginning of the war with Ukraine. It's totally insane. That's the kind of politician that we have also in France. And second point about transition economic geopolitics to economics is that the Moscow exchange announced that it will not conduct trading in US dollar anymore after new US sanctions on the Moscow exchange. So starting June 13, no trading in US dollar and euros in the Moscow exchange. So probably only local currencies. Okay. So next, the big move of the week, the big economic information of the week was what? CPI. CPI came weaker than expected, which was lighthearted many of market participants. Again, the CPI inflation rate fell to 3.3% when it was expected at 3.5. Core CPI was 10 bips lower again than expected. So it's slowing down, but the inflation is still above 3% for the 38th consecutive months, which is kind of crazy, if you ask me. As a consequence, the expectation for rate cut spike. So this is the probability of 2 forecasts this year. So it jumped from I believe it was 21% to 35% immediately, obviously on the CPI reading. At the same time, so maybe I won't talk about this right now, but so basically everyone, despite inflation being above 3%, everyone seems to think that fight against inflation is about to be won. Again, more expectations to have interest rate cuts. Now, if we look at this, the market is not exactly totally buying this. First chart is before 2020. the trend of inflation, which was at 1.8% a year. It jumped at 8.5% during the COVID crisis, and now basically the trend is 3.2% inflation annualized, which is pretty far from the 2% expected. As we see, I mean, the expectation on the market, the 10-year expected inflation is way above 2%. It's way above. It's 2.5, 2.4, but nowhere near the 2-point inflation target that Jay says is committed to reach. And which probably not happen anytime soon. Again, that's this chart that I like to show, because I believe this is what will happen, despite that the fact that I will say it again, I don't like that kind of historical comparison, because it's the same until it's not, right? But I don't see how it cannot go like this if we actually start cutting interest rates, and basically so if you want to go to the Fed summary, so the 2024 the Fed expects inflation between 2.4 2.6. More interestingly, the median forecast, from the dot plots for 2024 is still one rate cut only, even if the expectations for 2 rate cuts have risen with the CPI this week. The forecast for 2025 is 100 bips. Rate cut 1%. So if we do that, I don't see how we would not go to a much higher inflation like this. And actually, what I think is that if the Fed right now is starting cutting rates at this level of inflation, as you remember, it's above 3, still above 3. This only means that the Fed has totally abandoned the 2% inflation target that they tout in every meeting. So yeah, that's the fun part. About the fun part is one thing that I noted in his in Powell's intervention. I will read it because it's insane. Powell said that he does not have a definitive answer as to why people are not happy with the economy. Yeah, I mean, if anyone has a real sense of life here, I mean, you should find that very funny. And he said, we have an economy growing at a solid pace. So if you have an economy growing at a solid pace with that level of inflation, which is above your target, why would you even consider cutting rates? So, I mean, I believe that the Fed meeting, as I've seen one noted on LinkedIn, was really kind of a shit show. To be honest, the Powell's intervention, the CPI data being low, he tried to be hawkish, to compensate of that. The results was obviously the stock market spiking. There is no tomorrow, we need to buy. The only issue with that is, again, on Wednesday you had Apple, Nvidia and Tesla, 3 stocks were accounting for 63% of the S&P 500 total option volume. So it's become total madness on a couple of names. Only it's getting insane and total euphoria at this point. Total euphoria is usually a sign of peak, but we'll see what happens. It really looks like it feels that people feel that soft landing is assured, no problem anymore. Let's go. In another style, the economy is getting stronger, like Jay said, but more companies are defaulting. Again, the trend is on the high side. Well, maybe one last word on the debt with my big friend Janet Yellen. She's funny. So she says that the US debt load is in a reasonable place, right? If it remains at the current levels of GDP. So now there are two things, the GDP, as we've seen, this one, you have more companies defaulting. GDP is really a function of the liquidity that you inject in the market. And you have the debt, which is going to the roof. I won't show you this graph again. I'm not sure I even have it. I don't. So you have two. So the numerator, which is the debt that is going up and like crazy, and this we know it won't change. So you have the denominator, which is the GDP, and we know that the GDP is a direct function of the liquidity that's injected in the market. Again, look at the S&P priced in gold, which can be seen as the absolute reference. US dollar, any fiat currency cannot be. Anyway, I have a chart about this later. And what this means is that to keep on pace with the debt, they will have to inject liquidity more and more and more and more, which means reducing rates and taking inflation to the roof. And we go back to this graph. So I mean, I don't know what she smokes, but it should be the FDA should look into that. It should be forbidden. It's not good for you. So we'll move on to the markets now. Just a couple of funny numbers that I show regularly. The Mag 7, Magnificent 7, is always more magnificent. The Mag 7 now represents 1/3 of the S&P 500. Okay. This is what it is. I mean, the market cap is going of the Mag 7. The top 5 large companies, second graph, is going to the roof. And more importantly, if you compare the S&P 500 that is capital weighted versus the equal weighted index, it shows you a pretty significant discrepancy, again, which is the results of the market being taken up by only very few names. So basically, if you want to bet on the US economy, you only have a couple of names, 7, maybe 10, I don't know, but but my point here is that everyone looks at the S&P 500, says, okay, stock market's going up, everything is great, but like I mentioned the weeks before, you had Mag 7 that goes back to Mag 5, 4, 3, 2, 1, which is basically now Nvidia that is kind of sucking up the market up most of the time. Apple, spiked the other day, but that's kind of Mag 1, 2, 3 maybe that is taking the market up, and which increases the fragility of the market. It's one type of issue that I have with some investment strategies that let the trends totally develop, because at some point not really basically adjusting risk, because at some point when you had a portfolio that you were expecting to be invested in 500 companies, at the end of the day your portfolio is invested in 5 to 10 companies, which increases the fragility of your portfolio and increase the risk of your portfolio if it doesn't totally materialize in the volatility of the index that you can see here. Your portfolio is much more risky than it was before. So that's the kind of thing that needs to be taken into consideration. What do I have next? Maybe I should have put that graph charts bigger, but anyway, next. So top chart is the S&P 500, which you barely, but you kind of see spiking on the last few days, which was this week on the lower CPI data. Obviously that means lower rates, higher stock, so everyone is happy about that. What's also interesting is that the graph on the chart below, which is the VIX. I mean, yesterday was pretty interesting day where you had basically the S&P when Nasdaq was going up, still going up, lifted by Apple, Nvidia, well, Apple at least I remember. But you had these stock indices going up. At the same time, the VIX was going up pretty significantly. So saying that there was potentially something going wrong at this time, but you start seeing, more importantly, divergences between the stock index and intraday volatility, which is never the good sign. But fortunately, the cavalry came back in the afternoon and crushed the VIX as usual into the close, but basically that's the game that we have almost on a daily basis. Consequence of the elections, you see that this is the VIX in blue versus the V2X in what's the color? Orange, maybe. So basically the VIX is low, and V2X, which is the Euro Stoxx 50 volatility index, spiking on the election news, obviously, and it's still spiking again on yesterday or Thursday. I don't remember. That chart is from, not from yesterday, but probably the day before. So it's spiking again. Basically, it shows that Europe is concerned about the current elections in Europe, at least the markets. Again, that goes back to what I was saying. If the right-wing party wins in France, the market won't like it. There probably would be an attack on government bonds, which will prevent the next government, if it's elected, about doing anything anyway. So this is where we are in Europe. Europe is seen at risk. Obviously, what markets don't like, they can accommodate basically with everything, but what they don't like is change and uncertainty, obviously. This is where we are in Europe. So what else? Yes, I wanted to move on to some hard assets. And when I mean hard assets, is something that cannot be easily printed or created. So we have Bitcoin here on the top and gold at the bottom. They are still, even after the correction that we had the last couple of days on Bitcoin, we are still around the top. Again, when Bitcoin is moving down 6%, honestly, that's not a big deal, considering the volatility of the instrument. So we are not in a concerning situation yet on Bitcoin, in my opinion. I used to do some technical analysis stuff when I started trading, basically, like most of it. And I still do it, because it's fun and sometimes it can be very, very effective. So basically you have a flag like this. I believe that as long as we don't break out of this flag, we're still good to go. Now the question is that will it break on the downside, on the upside? We'll see that. But on the bottom chart, this is gold, which is holding pretty well at this time. So again, hard assets are doing well, at least in my opinion. Yes, and this is a chart that I wanted to show you from a long time. I told you that recently that I started looking at everything not in fiat currency, because basically the only thing that we know about fiat currency is it's going to zero at the end of the day. That's part of, that's the 2% inflation target, and even at the level of inflation that we are now, basically that's what drags down the power purchasing of your fiat currency. And we know by design that it's going to zero. So we need another way to value our position. And so I started for many things to price everything in gold, which is more stable. I think that this is the reference rather than the fiat currency, because of hard assets. And what I want to show you here is basically the value of different currencies versus gold. So what I did is that I took the spread of currency ETFs versus gold, and what you see here is that basically, as expected, they are all going to zero. So the chart is from 2006. I believe this is when we start having these currency ETFs. And so what does it show you? It shows you that the British pound has lost 80%. The euro has lost 75%. The yen has lost 78, 77%, something like this. The only currencies that kind of resisted are the US dollar, which is kind of a safe haven currency. When when you have trouble in the world, first you go to dollar, and if you have a bigger problem, then you go to gold. But anyway, that doesn't change the fact that you have inflation, and it's going to zero anyway. It's going less fast, not as fast, but it's still going to zero. So the US dollar is down 60% against gold since 2006, and the other couple ones that resisted was the Swiss franc and the Australian dollar. Surprisingly, maybe because that's considered like a commodity currency, linked to commodities, which I don't know exactly, but that's what you have to look at. If you save dollars in your saving accounts, that's the kind of trend you suffer. And that's why if I wanted to convince anyone to invest, not in a specific thing, again, I'm not giving any investment advice, but that's the only chart you need to know that you need to invest into something that will preserve the value of your asset, the value of your work. If you only have to look at one chart, this is it. So we stop on this. Next, what do we have? I don't remember. What is this one? I put charts. I mean, it's written so small. Yes, no, that's the dollar yen. Yes, we are on the currencies. That's the dollar yen. I wanted to show the dollar yen just because we see the two little spikes on the downside, which were the Bank of Japan intervention, and again, the dollar yen and the carry trade is going on, which means that the Bank of Japan is totally ineffective into trying to fight that yen weakness, which at some point, when you know that something is about to break, remember the British pound that Soros attacked in I don't remember, 1980s maybe, 1990s. I don't remember the date. I was a little bit too young to remember clearly at this point, but basically, if the market sees that something is about to break, they will attack it to make it break and make money out of it. So now I believe that we might be in a difficult situation for the yen, because obviously Bank of Japan intervention failed. They don't manage to prevent a reversal of the yen, even though I'm not sure that's what they want. But that's where we are now, and if it would go further higher than where it is now, I believe it's 156, 157, but this could go much higher potentially, and the US will have to intervene to help the Bank of Japan. That would be very interesting to follow. Bonds have spiked this week, obviously with the interest rates going down. Just a quick reminder, most of you know, but the bonds prices are going at the opposite of rates. If rates are going down, bonds are rising. If bonds are rising, rates are going down. That's how it works. Another last word about Europe. You've seen the impact of the European elections on the Euro stocks, which was a kind of a pretty significant move. But at the same time, I believe it's not totally crazy considering the volatility that we've seen in the past. Yes, it's a significant down move. Now it's not totally dramatic, at least in my opinion. So yeah, I think we're done, guys. If you have any questions about this, please put your questions in a comment. I will be happy to answer them this weekend or earlier this week about anything I said. Again, I would like to apologize for the technical issue. I know, because I received some message that some of you were ready to go, were waiting to do this live. I'm just realizing that my mic is a little bit far away, so the sound might be not very good. So again, I apologize about that. But I hope you get some interesting information. Don't forget to check my newsletter on Monday. There will be a little bit more detailed information, but I just said, and I will have the time, to review it, which means that if there's anything I've forgotten to say that I was expecting to mention. Yeah, I'm taking the mic closer now. It's a little bit late, but it is what it is. So I hope that so you get more details if I forgot any. So thank you very much for this. Sorry again. I hope you'll enjoy your weekend. Just because I was recording this, it was a little bit longer than it should have been. Anyway, thank you for your time. See you next week, and have a good weekend. Have fun, guys.